It's generally recommended that companies should prepare investors for nasty trading results. And superficially at least, you'd have to say that Qantas did that, but Fairfax did not. Origin and David Jones also did not, while QR National's profit beat expectations. Now, Qantas told the market in June that the international business would lose $450 million, and so it did. Qantas Domestic and Jetstar made $600 million profit, and there's a once-off write-down of $400 million worth of transformation costs. Fairfax's business actually made a profit of $286 million, which was $100 million less than last year. And the company even paid a dividend, albeit just 1 cent. But the mastheads were in the books for too much and had to be written down by $2.7 billion, resulting in a big reported loss. Now, investors knew the mastheads were overvalued, but they didn't like the trading result, and the shares closed at an all-time low, down nearly 10%. Elsewhere, it was a day for resources stocks to go up, led by BHP Billiton following last night's earnings result, for which investors had been well prepared. And they were relieved that BHP is not going ahead with the Olympic Dam expansion just yet. That's because they're watching the Chinese economy subside. Today we saw a manufacturing activity index which continued the bad news about Chinese manufacturing. It's gradually deflating, like the air is being let out of it. The optimists, meanwhile, are hanging on to the idea that China's industrialisation has just begun, comparing it to that of Japan, Korea and Taiwan. And it's true that in terms of GDP per capita, China is where Japan was in 1968 and Taiwan and Korea were in the early 70s. So there should be a long way to go if they can get over this hump. And the Aussie dollar has recovered to a bit more than 105 US cents, but it's down or steady against the other currencies. And that's finance.